This just in, there is a terrifying secret hiding in the accounting departments of almost every successful small business. The owner is completely broke. You probably started your service business to gain financial freedom, but you quickly realize that the more revenue you generate, the more money disappears into an endless black hole of expenses. According to the brilliant book Profit First by Mike Michalowicz, this is not a failure of your business model. It is a total failure of traditional accounting. Standard accounting principles are logically sound, but they are behaviorally disastrous for human beings. We are hardwired to prioritize the first information we see. When you look at a traditional profit and loss statement, sales is at the top and profit is buried at the very bottom. Your brain subconsciously treats profit as a complete afterthought, a leftover scrap you simply hope will exist by the end of the year. This mindset turns your business into a cash-eating monster that consumes every dollar of revenue while leaving you stressed and underpaid. Before you try to solve your cash flow problems by simply selling more, we need to look at exactly why the traditional math is destroying your bank account and how to reverse the formula. By the way, if you're new here, I'm Vicky Sidler, a StoryBrand certified guide and duct tape marketing strategist from the Strategic Marketing Tribe. And I help small business owners like you build failure-proof marketing that focuses on the exact 20% of effort that drives 80% of the results. All so that your marketing stops feeling like a miserable second job you never asked for. I believe your absolute greatest competitive advantage is simply sounding undeniably human. Because, let's be honest, if your business is burning cash on useless software and bloated overhead, your marketing strategy is probably doing the exact same thing. Stop throwing money at massive generic ad campaigns that don't convert. Download my 5-minute marketing fix to identify exactly where your messaging is failing so you can start attracting highly profitable clients without increasing ad spend. Okay, now with that out of the way, why will selling more actually bankrupt you? If you are currently trapped in a cash flow crisis, your accountant has probably told you that the only way out is to increase your revenue. This is the ultimate GAAP or GAAP lie, generally accepted accounting principles. The standard formula is sales minus expenses equals profit, suggests that if you simply sell more, you will eventually become profitable. In reality, the exact opposite is true because of a terrifying psychological reality called Parkinson's law. This law dictates that our demand for a resource will always expand to meet the supply of it. If you have $20,000 sitting in a single massive operating account, your brain will magically find a way to spend exactly $20,000. If you increase your sales to $50,000, you will just find $50,000 worth of new problems to spend it on. To fix this, Michalowicz insists you must adopt the small plates approach. If you want to lose weight, you don't use massive dinner plates. You use small plates to artificially restrict your portions. You have to do the exact same thing with your money. By intentionally restricting the supply of cash available for expenses, you force your business to innovate. When the money simply isn't there, you stop spending on nice-to-have software or redundant overhead because scarcity demands immediate resourcefulness. But you cannot achieve this scarcity through sheer willpower. So, how do you actually hack your own psychology? If you rely entirely on self-discipline to not spend the money sitting in your checking account, you have already lost the game. Most entrepreneurs rely on bank balance accounting. You log into your app, look at the single massive balance in your checking account, and make your spending decisions based entirely on that number. Traditional accounting tries to break this habit by begging you to study complex, incredibly boring P&L statements. Profit First does the exact opposite. It leans directly into your existing bad habits. If you're going to look at your bank balance anyway, you need to set up multiple highly specific bank balances that tell you exactly what you are allowed to spend. So what are the 5 foundational accounts? You must physically separate your cash into these specific checking accounts to enforce discipline. Number 1, we have income. This is the serving tray. All revenue goes here, but no bills are ever paid from here. Number 2 is profit. This is your ultimate reward account. This is strictly off limits for daily operations. Number 3, owner's pay. This is the fund dedicated entirely to your salary as an employee of your business. Number 4 is tax, a reserve for all government liabilities, so you never panic at the end of the financial year. And lastly, number 5 is operating expenses or OPEX. This is the small plates. This is what actually remains to run your day-to-day business. If you are VAT or sales tax registered, you must perform a step 0 deduction first. That money is never yours. You are just a collection agent for the government. Move it immediately. But having 5 accounts at the same bank is still too dangerous. To truly stop yourself from raiding the cookie jar to cover a fake business emergency, you must use a 2-bank strategy. You open 2 no temptation hold accounts for profit and tax at a completely different, highly inconvenient financial institution. You transfer the money there twice a month, removing it from your daily sight so it is entirely out of sight, out of mind. So how do you figure out exactly how much money to put in each bucket? And what is real revenue and why does it matter? If your service business relies heavily on subcontractors or expensive materials, treating every dollar of income as yours will cause a massive cash flow crash. These are pass-through costs. To find your true financial baseline, you must calculate your real revenue, which is your total income minus materials and subcontractors. If you run a $100,000 project, but $55,000 goes to subcontractors, your real revenue is only $45,000. If you try to take your owner's pay based on the full $100,000, you will immediately go bankrupt, because you are paying yourself with money that belongs to your vendors. Once you know your real revenue, you can slowly implement your target allocation percentages or TAPs. Do not try to change everything overnight or you will shock your system. Start with the 1% rule. Tomorrow, just take 1% of your income and move it to your profit account, deducting that 1% directly from your operating expenses. If your business can survive on 100% of its current budget, it can absolutely survive on 99%. When your OPEX account inevitably runs low, you have reached the moment of reckoning. You are not allowed to raid your profit or tax accounts. You must innovate your way out of the crisis by cutting unnecessary subscriptions, firing expensive, low-margin clients, and finally running the lean, highly profitable machine you actually set out to build. If you are ready to cut the bloated overhead out of your business, you need to cut the bloated corporate jargon out of your marketing. Get my 5-minute marketing fix. It helps you identify exactly where your funnels are leaking highly profitable clients, allowing you to streamline your message and close more sales without spending another dime on advertising. Stop losing sales. Download the fix now. You can get it for free in the description below, or you can go to strategicmarketingtribe.com/fix. But what about you? What was your most absurd, where the hell is my money moment? I'll go first. I remember sitting in my accountant's office at the end of my first big financial year. He shook my hand and handed me a P&L statement and cheerfully congratulated me on a massively profitable year. I looked at the huge number on the page, secretly opened my banking app under the desk, saw an available balance of roughly enough to buy a sandwich, and seriously wondered if I was being pranked. Okay, your turn. When did your financial statements completely lie to you? Let me know in the comments. I'm Vicky Sidler from the Strategic Marketing Tribe, and I post helpful book summaries for small businesses every week.